Hello, I'm just a placeholder. Oh, this is actually the wrong title, but it doesn't matter. By the way, I started a new company called Trend. Hello, everyone.
Hello, everyone.
Okay, let's get started. So the reason why I'm here is primarily because Santiago's not here, and then I'm
Stuck
just
in
a
weather. It's fucked,
placeholder for him. But I'm very honored to be a placeholder.
I would much rather you be talking to you than him. Just FYI.
Right, seriously. But I'm the host now. Like you're the speaker, so you can. No, I'm saying like you can speak more. That's why. Shall we? Do we need any intro or just like dive in?
No, let's go.
Okay. Let's talk about the first thing I wanted to touch upon, which is the token flywheel. I mean, you have this very strong opinion about token flywheel since maybe 3 years ago, like, step in, buyback, so on and so forth. I'm curious, like, how you think about all these companies that is actually generating revenue, how they treat their money in terms of the token buyback. What's the approach? What's the ideal kind of phases for that?
I think doing 100% buyback, it is a incredibly inefficient use of capital.
I thought you were going to say stupid, but sorry.
No, well, it's if the business needs no capital to run, they should spend all the cash in dividends or buybacks. Since you can't do dividend because the SEC fucks you, you have to do buyback. However, since these businesses are very early stage, the capital that they use for buyback could actually be redeployed into something else that is actually even better for the business longer term. Now, the problem to that is because there are so many grifters in crypto, that just rugs people with their token. Buying back the token with a lot of cash signals two things: is that you actually are a legitimate business and that you care about your token holders. So the businesses that actually want a high valuation with a legitimate business have no choice but to signal with the big pile of cash that they have in buyback, even though it is capital inefficient, in exchange for it for actually a higher valuation. What is the solution? Well, there are a couple of ways, but one way, for example, we kind of talked about this, is setting up a well-defined KPI criteria for range where you sell tokens at some above price and you buy back at some below price, one. And then two is you just tokenize your stock, and that won't be an issue anymore, because there is an inherent trust in a security structure that if you own a security, you can sue the fucking guy if he drugs you. Then that's legal recourse, protects investors, therefore allowing them to do better capital allocation.
Don't you worry that having a cap for like whenever you sell it would just basically give people the expectation to front run you?
Yes, so maybe you only set a level where you buy back the token and never set a cap. That's also possible.
So you don't tell people?
Oh, you don't tell people. I mean, you look at Michael Saylor, he just like, right? Mm-hmm. And maybe he'll buy back at some point, but.
I see. The other question I was very curious about for you, because you were a institutional investor before starting Folius, and you've been running this crypto native investment business for a long time. Now it's like 4th year.
4 year, yep.
Yeah, right. How do you think about like this? Having this crossroad or crossover knowledge of understanding how private equity, how buyout, whatever works out, versus like having all these like crypto native knowledge. Like, what do you think the next step for you? Or for people like you would generally be? The context is actually, for example, Santiago, he started our version. For those people who don't know, he actually looking for like low PS or PE ratio business to try to like give them a way to tokenize or add in like token as a way to improve the efficiency. So yeah.
So Santi's very smart because he effectively tokenized the GP to be a layer 1 chain. I think the big background it's really exciting for me because historically launching a token operates in this gray area of if I go back to Shenzhen or China, the Chinese government just maybe they could grab you if you launch a token. But now with Trump and the SEC sort of really legitimizing the industry, I think the innovation exemption that they're going to keep pushing forward to will allow for the two world of tokenized equity and tokens to merge along one another, which means that you can, in a compliant light way, issue a token with value capture, or you can tokenize your equity and trade maybe within some ring fence, but still great access to liquidity at a fraction of the cost it was before. In that world, it's actually legal kind of to launch a capital vehicle. And in that world, compared to a fund, for example, you could get a lot of advantage in doing a token or a stock that has access to global liquidity with all access to DeFi, and maybe the market will even give you a massive premium. So that's something I'm thinking about that maybe I could do now. Now that I don't have to fear about illegitimacy of the token business.
Now that you mention, feels to me like quite similar to Forward strategies in a sense.
Yeah. So funny enough, Kyle. The only difference that Kyle has to, figure out is can he venture way outside of just owning Solana as a big part of his NAV. He could go out there and buy Phantom, for example. He could go out there and buy, I don't know, like a Western Union,
he
right?
Did say that.
Right, and then he could just like put it on to, I don't know, like the Solana blockchain. But when he does that, the NAV of the company becomes 20% Solana and then 80% whatever that he operates. It's almost like a mini Berkshire, but he's doing a NASDAQ. But in reality, it's almost the same thing, except I want to kind of do it. If I were to do it, maybe through a tokenized format first.
Interesting. So now that you mentioned this, so like for someone who's currently working on a venture business, it's probably quite universally acknowledged that it's quite hard, especially for the past 12 to 18 months. And I think similarly for a lot of like early stage founders, it's also quite hard for them to raise money. What would you give in terms of recommendation or advice for, either side of people for the current playbook?
Like for venture investors and founders?
Yes.
I think for venture, they have to just pick their spots and you really go back to the old way of doing venture, which is, know
fundamentals.
Yeah, well, it depends on, hopefully. And then for startups, startup is generally hard. It's hard to raise money anywhere, and maybe if you're not doing AI and robotics, it's harder. But I don't know. I think it's really about achieving some form of product market fit and really being convicted that without a token or without an IPO in like a year or 2 years, would you still be doing what you're doing?
So it's more revenue driven. I mean, you made it very diplomatic, so I'm trying to
I think if you want to launch a token and work, you shouldn't do this business.
Oh yeah, of course. I think I agree. I mean, these days launching token is low ROI, almost negative ROI.
Yeah,
in a sense.
I don't know. For the founders, it's harder, but a greater pool of U.S. capital was open, and they would back, those who really believe in what they believe in, plus really have a potentially sound business plan, a lot of money, and that's not what a typical crypto startup looks like, a year or 2 years ago. And I think those founders are potentially better off to just not do the startup.
Another question from my end was tokenized T-bills, money markets, and so on and so forth. I mean, I know we all know there are quite a few players already doing it. What do you think is the indication for the general market flow as well as the larger institutional player kind of participation for that?
So the question is, what does the T-bill mean for the industry when the institutions come in participating in them? Is that the right way to think about it, or whoever is not part of it. For example, BlackRock has been doing something. I think Franklin, what is it? The one Benji. Templeton, yeah.
Correct. Yes, They were also doing Benji and stuff. So I'm just wondering, for the broader market, what would be the indicator for them, in terms of action, and also the future money flow in terms of the general market?
Well, I think you have something that can be transferred. You have the unstaked USDE, right? That everybody used to transact, and then you have the treasury bills that's underneath that kind of backs them. And there's this very simple one-step process. If you kind of lock it up or stake it, or if the vendor gives it to you, you're participating in the pool one of the US dollar Ponzi. And it is in the US government's best interest to aggressively broaden the both the buyer of these treasuries and in the same token the usage of stablecoin cross borders. And because that is a natural strengthener of the US dollar, which allow them to be even more aggressive in whatever easing that they're doing. And whatever barrier that is in there, they need to knock down. And that includes forcing countries to knock down their borders and allow stablecoins, because it becomes ultimately a buying of US Treasury underneath. And it basically means allowing regulation to be loosened for any company that enable this global perpetration of US dollar. I think for Huma Finance and PayFi in general, like I sort of view whatever friction that we have today, the T+1 to T+3, it is in the U.S. government's best interest to shrink that down to like 0, because when it's 0, it is the usage of this thing would just even explode further. And in that process, there is this huge service area of factoring and financing that any vendor can do that really well, which is capture, and they can rotate that free cash flow to building something that prepares for that, zero latency future. And so I think for those companies that play with stablecoin and treasuries that are not doing crypto, I don't know, they probably will get their lunch eaten alive. And that's why you see like all these largest potential companies that participate in payment flows are all like aggressively coming in, because those who aren't, like, they're just going to get absolutely disrupted.
Awesome. You said you had some questions you wanted to ask.
I do.
How much time do we have? 5 minutes?
Okay. So as you know, Laura Shin launched the Unchain token on Pump.fun. And this is a question you have been tossing with live streaming in general, because Trans is also thinking about something similar. What do you think Elon said to Laura that got her over the board and being comfortable, if he said anything at all? And then do you think having a coin with a token, having a coin with a live stream, and then having transactional fee as like, the way to pay the creator is like the best way to do this? It's not a 5-minute answer, but.
I do think about that a lot. Actually, I was trying to talk to her as well. The reason why I recently started a live stream very aggressively on Twitter is exactly because I was exactly thinking about the same line. The only difference is that I think right now the Pump and Zora model, they're actually trying to tokenize amongst the creators who are, 1,000 creators, 500 creators on Zora. It's like native creators. But that content actually matters. Meaning, let's say like today you have like some on Web2 YouTube channel. Like there are some people who are like consulting other people for their relationship problem. These channels are really highly watched, but it's really hard for them to monetize whatsoever, because like there's no advertiser they're gonna pay for that. This type of channels is actually a better content pool than like just randomly someone streaming themselves sleeping on Pump. So with that, I'm serious, right? Like, so I think that the idea should always be that you want to tap into a huge amount of content pool and then trying to find the ones that are really hard for them to monetize, to help them monetize. So going back to your question, whether the trading fee should be the a good way of monetization, I think yes, partially. But on the other hand, you should also try to think about like how to design a really an ecosystem that not only incentivize the creator, but also the communities around them, the early supporters, as well as like the fan art creators. So I think like I don't think Elon actually did any BD. Laura Shin has always been thinking about doing something or exploring that. So I think the huge problem, another challenge for a lot of the Web2 creators, is that they don't want to launch a token. They want someone else to launch a token, and they can just be there and take the fees. And a tokenizer obviously could get a bit of curation set up. So I actually like the model that Pump recently had, which is like they tier the fee, whatever people get based on the volume. The higher market cap volume, whatever, you're getting smaller. But at the beginning, you obviously have a lot, so that you have a kickoff kind of incentive. I think like what Laura Shin was doing is absolutely the right direction. But I think from a broader standpoint, if we were talking about like trying to launch streamer coin, I do think that we should try to tap into a larger pool. Where there are really interesting stuff and where people are really hard to monetize, and then you can use the token as well as all these mechanisms, or for like redistributing all these fees back to people who deserve the fee. And I think that's like probably the right model to do. So I do think that streamer coins are going to be a very interesting concept. Not just streamer coins actually, but also IP in general. Like let's say, trying to think who else. Maybe Balaji, he has like, Substack or whatever. But he keeps producing. I think what makes a really interesting IP or makes a long-lasting IP requires 3 parts. I was talking about this yesterday at Solana Apex. One is like you need the creator to be continuously, very diligently, create things. That means like you're building, you're cooking, right? Second is like you need the fans, whoever engaging very well continuously as well. And third party actually want, you know, some of the audience are paying for that, you know, on Weibo or Naver. Like these fans are actually paying the platform to buy the celebrity or star up to the top search, right? That's what people are paying the money, and no one's gonna get the money. The creator are not, the fans are not, Naver's getting it. So like we are trying to redesign a model where like people could like spend that amount of money, but then like instead, you know, that amount of money, majority of it will go back to the creator, go back to the early supporter, as well as like whoever have been like longer term working on trying to make this IP popular. So I think that's kind of like the, in a nutshell, the future of like how I see all of these kind of will work.
Thank you.
Okay. I think we're about time. Awesome. Thank you guys very much. This is like a very free flow thing, so I hope you guys all enjoy it.
Give it up one more time for Jason and Mabel, everybody.